Hey, Ivan from the EV Stock Channel here, and today I'm going to be taking a deep dive into Tesla's valuation and some key ratios like price to sales, price to earnings, and then comparing that to some other tech and auto companies. But before we begin, thank you to all the Patreons that support the channel, and as always, all content is simply my opinion and interpretation of the data and not financial advice. So let's begin. Let's start off by looking at revenue and revenue ratios of Tesla, along with some other companies. First of all, here is Tesla's revenue following Q3 2021 earnings going all the way back to the start of 2018. Next up, I annualized Tesla's revenue, but simply taking each quarter's revenue and multiplying by 4. And by doing so, we can see that as of Q3 of 2021, Tesla's revenue run rate was at 55 billion, and remember, China is still ramping while Giga Berlin and Austin are due to come online in the very near future. Here are Tesla's third quarter year-over-year revenue growth rates. Tesla has guided for about 50% growth rate, and that's exactly what we're seeing on average. Next, let's have a look at Tesla's price to sales ratio, which is market capitalization divided by revenue. The time frame we're going to cover is from the start of 2021 and onwards. And the reason for that is, if you go back further, Tesla was in a different world regarding valuation. For example, in 2018 and 2019, people questioned would Tesla even survive? Would they be able to ramp Model 3 production? Whereas now, people are starting to factor in Tesla's future growth, execution, and profitability. So with that said, here are Tesla's price to sales ratios from Q4 of 2020 to Q3 of 2021, and using this metric, Tesla was most expensive in Q4 of 2020, when the price to sales ratio was 15.6, and was the cheapest in Q2 of 2021. And let me add, no one ratio alone can tell you if a company is either under, over, or fairly valued. They each just give you one angle to see a much larger and complex picture. The goal of doing this analysis with regards to price-sales ratio is to simply track quarterly stock price changes to revenue changes and just see the trend. So keep that in mind. The final slide regarding price-to-sales ratio is comparing Tesla to a number of different companies. To put these numbers into some sort of perspective, Tesla's price-to-sales ratio is double that of Google and Apple and 3.5 times more expensive than Amazon, while GM and Ford are under 1, and these numbers are no surprise as GM and Ford do not have the revenue growth that Tesla and some of these other stocks do. Finally, let's have a look at the forward price to sales ratio using Q4 2022 revenue estimates of about 25 billion, and when doing so using today's market cap, the price to sales ratio drops to about 10, which shows you just how much the valuation can change in about 12 months' time. But then again, this is just based on estimates. The next metric we're going to be examining is earnings, where Tesla has achieved 9 consecutive profitable quarters, and in Q3, Tesla recorded a new record 1.62 billion in profit. Again, using quarterly profit numbers and multiplying by 4, we can see that in Q3, Tesla had a PE ratio of just under 120, and more importantly, the price to earnings ratio has been falling over the last 3 quarters as profits have been increasing at a faster pace than the stock price. And if the stock doesn't go up as fast as earnings are rising, then we're going to see the PE ratio go lower, meaning the value of Tesla's stock will be improving. However, there is still a long way to go before the end of December. As we saw with the Hertz deal or Elon paying taxes, these moves can move the stock hundreds of dollars either up or down over a very short time period. In the next slide, we're going to be comparing Tesla to the other companies as we did with revenue, and yes, looking at a snapshot of Q3, Tesla does look like it's the highest price compared to its peers, but that's to be expected as their earnings growth rate is also the highest. To finish off earnings, let's have a look at the forward price to earnings ratio, again using Q4 2022 earnings estimates run rate of about 5 billion, and when doing so, the PE drops to about 50. which would match Tesla's annual growth rate of about 50%. And why is that significant? Well, consider this from legendary stock investor Peter Lynch discussing the fair value of a stock.
Fairly priced stock is a PE. It's about equal to the expected annual growth rate over the next 3 to 5 years. If the PE is substantially higher than the growth rate, the stock is normally expensive. If the PE is substantially lower, stock is probably cheap.
Next up, let's have a look at Tesla's long-term debt. And here, there are two major things to notice. The first being, Tesla's $6.4 billion of long-term debt is a minuscule amount for a company with a valuation of $1 trillion. I mean, their long-term debt is less than 1% of their market capitalization. The next thing to note is that the amount of long-term debt has been falling consistently over the last few quarters. Now, this is significant because come earnings time, the less interest Tesla has to pay, the higher earnings will be. Next, here is Tesla's cash on hand, and even as they have been paying down high interest debt, being profitable has allowed them to maintain their cash on hand above $16 billion. So this is the advantage of being profitable, in which they were able to reduce debt but still keep their cash. In the final chart, I want to talk about automotive gross margins, and sometimes a picture or a chart in this instance says 1,000 words, because any way you dice it, the trend is looking good for Tesla's future profitability. As we can see, gross automotive margins, excluding credits, have been increasing steadily, while at the same time, the credit portion of gross margin has been decreasing. Which means this chart can put to rest any arguments that people have stating that Tesla is totally dependent on credits to be profitable. So I hope you guys enjoyed this breakdown. I'll be updating all of these metrics and adding more metrics as soon as we get the results from Q4. But let me know what you guys think. Are there any other metrics that you'd like me to break down? Or is there something that I could be doing better, as I am not a financial expert? And stay tuned, as I will soon be releasing sales, revenue, profits, etc. All the numbers comparing Tesla to other manufacturers like GM, Ford, Toyota, and VW. And new episodes of the Tesla documentary series, The Year of 2020. That will be a 3-part series. As always, early access for the Patreons. So till then, stay safe and I'll see you guys soon.